A warm welcome to Business Daily right here on Trust Television. I am Yusuf Akogu. Let's take the business top stories. Glad to have you back. Now, before we go to the stock market, let's serve you the fact allocation that was shared earlier in the week by federal government, state government, and of course, the local government council. There over 903 billion, 0.48 billion was shared out of that. If you look at the breakdown there, the state government the federal government, I beg your pardon, got 320.543 billion naira. The state government 287.071 billion naira, while the local council shared 210.900 billion naira. In terms of oil producing states, they're talking about 13% derivation, 84.966 billion naira was shared among the oil producing states as 13% derivation. And look at the cost of collections of that revenue, 54.426 billion naira there. If you look at the transfers and refunds, that's about 347.857 billion naira. And of course, the non-oil revenues as well, talking about the savings now, 289 billion naira, and the gross revenue from VAT, that is a value added tax, 303.550 billion naira. Let's look at the states in terms of how much they depend so much on this revenue. We look at the state like Bayelsa State, 94.1%, Kebbi State, 92.5%, Katsina, 91.9%, Akwa Ibom, 90.8%, Yobe, 90.1%, Taraba, 89.8%, Adamawa, 89.1%, Benue, 8%, Niger, 88% as well, Borno, 87.8%, Ebonyi, 87.3%, and of course, Imo State, 86.6%. These are according to data from National Bureau of Statistics. Let's also look at the states in terms of revenue generation. Let's look at how they stand. Lagos State taking the lead there, 958.46 billion naira there. You look at River States, 523.75 billion. Delta State, 492.23 billion. Akwa Ibom, 378.17 billion. Bayelsa State, 269.75 billion. In Kano, 246.07 billion, and then in FCT 245.11 billion naira. In FCT 245.11 billion. Oyo State 221.31 billion. In Ogun State, 209.58 billion. Kaduna State, 196.34 billion. Edo State, 174 161.50 billion, and Katsina State completing the top 12 there, 161.18 billion naira. This is a huge number there in terms of a state with highest revenue collections. From there now, we'll go to the stock market to give you highlights of the stock trading as it went down on Thursday. All right. Before we go to the stock market, we'll take a very quick break. When we come back, the shows continue. All right, glad to have you back. Now we go to the stock market now to give you highlight of the stock trading as it went down on Thursday. The market closed in the negative territory, apparently reacting to what we had yesterday from the market, 0.18% down, and that is how the market went yesterday. In terms of volume of trade, there was a largely decline there from the what we had on Tuesday. Of course, if you look at the gainers table, you don't really have some of the top equities there. You have the Mark Nichols from the a sugar producing company from the industrial sector, the UAC, and of course Wando. If you look at the value, I mean the percentage gain by these companies, you see that their marginal percentage 8.93% there, 6.09, and of course 4.07%. If you look at the share price, they are also marginal there. We look at the top losing equities on Tuesday. Of course, Secured Electronic Technology, they're losing 10%. Computer Warehouse Group also losing them. Of course, Thomas Watt Nigeria also losing 9.84% there as well. Look at the top trading equities. In top trading equities, you have the Fidelity Bank, the Shams, and of course, Access Holdings PLC. So these are the 39.8 million volume of shares, 25.5 million volume of shares, and of course 20.6 million volume of shares respectively. Let's look at the sectorial performance quickly. The performance across sectors: the banking sector is down 0.33%. The industrial sector is flat. It's been like that for a couple of days. The consumer goods sector 0.12. You look at the oil and gas sector, also not much activities there for a couple of days. Now the insurance sector is down. The highest loser, of course, on the day, 1.82%. Now we talk to our guest now, Mr. Steve Nwachukwu is an economist, and he joined me virtually from Abuja here. Good morning, Mr. Steve.
Good morning, and thanks again for having me.
All right, it's always a pleasure. Let's quickly get your reaction from the Supreme Court judgment yesterday. How do you think the economy, and of course the stock market, is reacting to that judgment yesterday?
Well, like expected, investors are weighing into the decision of the Supreme Court, but the aspect of which investors prefer most is the atmosphere. There's some level of sanity, some level of calmness. At least the mandate has been granted for the next 4 years. So there's some level of direction. So people becoming afraid, being uncertain what will happen, how the decision will go, have come and gone. Now, both local and foreign investors are well settled with the right information that this government have come to say. So the investors will definitely weigh in to that judgment and see how they will, make use of it, in the sense that those who want to increase their investment will increase their investment. Those who think they perhaps think otherwise will also take decision in that regard. But it's a good thing for the market that this political turbulence has been In fact, it is over. Nobody is expecting for any change in government. It is settled that we have a government, and this government is going to be functional for the next 4 years. So it is a kind of settled atmosphere in the capital market.
All right, settled atmosphere, you said, in the capital market. Let's see whether the portfolio investors now, who were before now sitting on the window, do you think they will now bring in their investments? That confidence, has it been restored with this Supreme Court judgment?
It's expected that now that the political turbulence period is over, the market is settled, business will go on. And it's also expected that foreign portfolio investors will move in. And it also takes to account for some other political decisions or economic decisions that the government is expected to take. And not just the decision of the Supreme Court, it's also some of the fiscal decisions of the government. Both fiscal and monetary decisions will determine the rate, the flow of this foreign portfolio investment or foreign direct investment. So it is now on the tables of the leadership of the nation that will put up those policies, those plans, those commitments, those bilaterals that will attract these very foreign investors in form of portfolio or in form of the foreign direct investment. So it's a question of their posture. What is their posture in bringing and attracting these very foreign investors to invest more? It is also their posture and their plans that will determine existing investors in our market to remain within our shores of our market, because nothing forbids investors also from moving to the other sides of the markets or across the world to invest. But like I said, much is expected of them to bring some level of sanity, to bring some level of direction, to bring some level of commitment that would drive this investment that is expected of them. So it's now the ball stops on their decks now to start taking those right decisions, those right common policies that will attract and drive businesses across the continent of Africa and in particular Nigeria.
All right, build on the current policies that you will say quite a whole lot of decision has been taken in terms of policy formulation. Maybe the implementation stage where it will benefit the ordinary Nigerians is an area that the government needs to focus on now that the coast has been cleared for them. Don't you think so, Mr. Steve?
Yes, of course. Like I said earlier, it's more like you don't have any issue. There is no turbulence. You are not worried that your mandate will be truncated by the Supreme Court or by the judiciary. It is settled, and it's certain that you are going to stay for the next 3 and 6 months or 3 and 8 months, because you already have about 6 or 5 months gone already. So it is well settled so that all your short, medium and long-term economic policies, you are very sure. So even when you move into bilaterals, even when you move into agreements or communication or dialogue with investors, they know that in the next 3 and 8 months that this government will remain. So whatever agreement will be binding. So both your short-term, middle-term, and long-term economic decision is a sort of settled or certain. There won't be any truncation, except on the side of the government, except on the side of the officials of the government, where you see some level of policy inconsistency or policy somersault. You take a decision to the left direction today, you come tomorrow, you take a decision to the right, you reverse your decision, except on that ground that will hinder foreign and local investors from coming in or from also expanding their business line in the shores of Nigeria. So it's a question of their direction.
All right. Talking about direction now, there is also a very area that is very, very worrisome to many investors. Talking about the forex market, you know how volatile that sector is, and as of today, as we speak, Naira is exchanging for over 1,000 Naira, about 1,300 Naira or thereabout in the black market. Don't you think this is also something that investors will be looking out for before they consider coming in with their investments?
Of course. You see, I keep saying it, how it boils or surrounds around your policies, your economic and fiscal policy decisions. You took a decision at the sake of your administration that you're going to unify or cause for convergence through the policy of flotation of naira. It has not gone all well because the problem is not just the policy, the problem is the supply. You deal with the issue of the supply aspect, which is attracting flow of forex to the shores of naira to defend or to meet up your balance of payment, and also by helping naira regain its strength by making sure that you produce or implement backward integration programs that will help local production so that demand for foreign-made product or foreign-made goods will reduce, so that the demand or the defense of naira would CBN can have grants to defend naira. So the government has been taking decisions. Most of them have not augured well. I still believe they have opportunity to take right decisions that will actually salvage most of these very current economic situations that we are facing.
All right, talking about the decisions not being favorable, what do you think government should do at this point, considering the fact that a whole lot of build-up has already been done already, and of course there are some policies already that is on ground, and a lot of Nigerians also hope that in the long run, just like government have been saying, that the economy will benefit from it. But what do you think should be done in a short term to cushion the effect of all these policy decisions that has been made? Obviously, the issue of palliative has not really been working.
Yes, it still boils down because our economy is a mono economy in the sense that we solely depend on oil. Oil production determines or trickles down or perhaps triggers every other sector economic activities. Yet we have other performing sectors like the financial service sector, the hotel, the name it, the agric, they are doing their best. But the point is that the revenue, just like you read earlier, the federal allocation that was shared 2 or 3 days ago, it will trickle down because most of the revenue accrued from there is from the crude proceeds of the crude. So crude has always become so essential because it's the major source of the forest. It seems like it's a sole determinant of the performance of other subsectors. Crude oil or oil and gas seems like it's a sole determinant of the performance of other sectors. If we do not have production of crude or proceed from crude today, the financial service sector will be affected. The agri sector will be affected. So a lot of other sectors will be affected because a lot of dependency is there on the crude sales proceed or the activities around the production of our oil and gas. So it seems like we have so much pushed the economy to this very point. That's why we continue to call some level of diversification so that other sectors will work or survive independent of the crude. The fact shared close to ₦1 trillion a couple of days ago, you will find out that it will impact in the banking service sector because as the money moving in there, the deposits will increase. Even in the capital market, it will also, we will receive some flows of cash into the market because when contractors are paid, they will look for areas where they will either they do fixed deposits or they move some substantial part of it to the capital market. Like I said, the proceed of crude or activities within our crude or activities within the oil and gas seems like is a predeterminator for other sectors' performance. So we need to do a lot around it. The short, like you asked, there is no quick fix, but the most immediate measure that will help the economy and help the forest market is to kill this issue of oil theft. Oil theft is affecting the revenues that we are having. If we can deal with the oil theft, it will help the economy, it will help CBN defend naira. If we can shore up our crude oil production so that we can have more sales proceed of crude or more sales proceed of dollar, it will help naira regain. Yes, couple of days ago or yesterday, naira gained around 200 or 250 naira in the para market is just as a result of the Supreme Court judgment, who gives some level of clarity, certainty for investors. Yes, that this administration have come to stay. So we still need to do the most critical aspect of it is the issue of oil theft.
Right.
Those 400, 500 million barrels of crude that have been stolen on daily basis. If we cut it off, convert it, CBN will have enough to defend the naira. Naira may even crash to somewhere around 600. If you can pop up your crude oil production and cut off all this oil theft, the chains and cabals in the oil theft, you will have enough revenue, you will have enough forex that will be able in the short term defend naira to somewhere around 600 or 650, not selling above 1,000 or 800 naira in the parallel market, in the official exchange window.
All right, Mr. Steve, you made mention of economic diversification there. For a very long time, we've been talking about this, moving away from the mono economy, like you rightly mentioned. Looking at what we've done for the past 24 years or thereabouts, since 1999 to date, every government has been talking economic diversification. Why are we not making money from our other solid minerals that we have? If you go to Zamfara State, you have the large deposit of gold there. If you go to Jos Plateau State, you have the tin columbites, and so many of them. Go to Kogi State here, you have quite a whole lot of mineral deposit. Why are we not, tapping from all these resources?
It's unfortunate that we continue to have this conversation around under remittance, under or illegal mining of these very natural mineral resources that Nigeria and Nigerians federating states are richly endowed. Well, one can say is a lack of political leadership or the vision or the innovation. And one can also conclude is some level of complicity because we'll continue to see some level or the growing involvement of political actors in these very illicit or illegal activities of mining our solid minerals. So I don't think that the current or the past leadership has this very willingness to deal with the issue of illegal mining of natural minerals. So it's a question of having the right political leadership who understands that, yes, this is a collective national resources that God has endowed Nigeria with. And how can we produce it, mine it, and make use of the proceeds of such items to develop other sectors or to enrich the lives of Nigerians? So it's a question of political commitment, willingness of the political leadership that will help us solve this very issue. Like you said, we'll continue to talk about it. Gold is being mined in Osun State, mined in Zamfara State, and no kobo is being remitted to the Federation account. Other minerals in the north central area, the Zamfara, the Kogi State, name it, a lot is going on. Even in the Niger Delta, a lot of bunkers springing up from one creek to another, the bombing of those refineries, illegal refineries, and all this going on. Like I said, there are level of complicity. There are signs and shows of complicity of our political actors who are greatly involved in these illegal or illicit activities. That's why you can see some level of security, buying of arms in the Zamfara area, whereby they secure the areas. And you find out that these political actors are fully involved. Until we have the right political leadership, the process of recruiting them, recruiting the right people who are well concerned and committed in raising revenue for these federating state and federal government, you will continue to have these issues occurring.
All right, Mr. Steve, as we wrap up now, I know you are also a stockbroker, aside being an economist, and this market is on right now. Yesterday, in reaction to that Supreme Court judgment, the market closed negative 0.18%. What are we likely going to see today?
Well, we're going to see some level of, I don't think the Supreme Court judgment, the investors actually have reacted to it because Nigerian investors at the nation's capital market are rather looking at the numbers that are tripling in the market. In this week, we've had a couple of financial institutions releasing their third quarter unaudited financial statements. The likes of the Guaranteed Trust Bank have made it available. They grow their top line by around 73% and 180 around 73% and 180% in the top and bottom line. The revenue of Guinness also increased from 52 billion to around 59 billion, about 13% and 7% in top and bottom line. And Nigerian breweries also was rather in a loss position in their financial statement. Their revenue drop or their profit loss after tax went as deep as about 472%. Then you have Dangote, well, very impressive results, grew its turnover from 1.41 trillion to around 1.5 trillion, and profit after tax also went up by close to around 30% from 213 billion to 277. You see the Cabaret, the Total Energy, the Transcorp, the Access Bank. Quite impressive results are coming in, and I believe in the days and weeks to come, investors will weigh in. As we even speak today, the market is expected, the market breadth is expected to go up because some of these very results are quite impressive, and investors will actually react positively to it, and we see the index edging up today. Have in mind, despite the economic situation in Nigeria, Nigerian market has benefited mostly. In fact, year-to-date increase in the market is still way above 25% or even somewhere around 30%. So the market breadth is still quite high. It's growing even above our inflation rate, which is around 20 or 27%. The market is growing above 30%. So the market will chew in these very figures that is coming in, coupled with this certainty and clarity in the political leadership of Nigeria.
All right, Mr. Steve Nwachukwu, an economist and also a stockbroker, I must thank you for your contribution.
Thanks again for having me.
All right, and with that is a wrap on the show for the week. We'll be back on Monday. I am Yusuf Akogun.